In your work, you compare the current economic situations with the oil shock in the early 70s. Do you think that those two are really comparable? Are we in a similar situation?
We had a terrible oil shock in '73, like in 2008, where the cost of our oil became 4.5% of global GDP, really expensive, followed by a terrible financial shock, the worst bank failures in German history and American history since the 1930s, both struck in 1974. And that's exactly what we felt like in 2008-9. Today, I think we are seeing the after effects of that same set of shocks, and they are the same. They are fiscal crises.
People say we are we have been through the worst recession since the Great Depression.
Yes. So
isn't
it more serious now?
The last time we said that was 1974-75. It is worse, that's true. And that's why it's going to be even more of a struggle to get out of it. But if you want to understand the sort of pressures on governments and on people, then it's worth looking back to that period and asking what happened. And what happened was massive budget deficits across Europe and America, problems globally. The IMF had to bail out everyone from Spain to Italy. The biggest ever IMF bailout package was in 1977 to the UK, I'm very proud to say. So we've been through this, and we know now that this means that the fiscal problems, the budget deficit problems in the West are going to continue for years.
Well, euro certainly was not the same back then, so that's a new variable. What role does it play now?
Well, the euro has certainly offered some protection for countries like Greece, Spain, Portugal. They haven't had banking crises. Their currencies were not allowed to collapse, which would have happened to other countries, other emerging markets at this time. But equally, because their currencies could not weaken, they haven't been able to get the export boost. And that's telling us that Spain and Greece and Portugal are going to struggle for a number of years.
What is the future of the euro project from the perspective of the countries that have not joined the eurozone, such as the Czech Republic?
I think it varies dramatically. If you're a country with a fixed peg, like Estonia or Latvia or Lithuania, Bulgaria, they've all been pegged to the euro for 10 years or more now. They're too small to have their own independent monetary policy. But for the Czech Republic, Poland, Romania and Hungary, I personally think there is no point now in joining the euro.
Are we that much bigger, or are our economies that much more important? Couldn't you use the same arguments? And this is the argument that our exporters would use, for example, that the Czech economy is small and we need those transactional savings.
I think it does help at the margin, but the big reason countries joined the euro was not because of the transactional gains, which as an economist, we like that. But the politicians loved the collapse of borrowing costs. When Greece joined the euro, interest rates went from 12 to 4, which means Greece could borrow more money, and they did, and the Greek people could borrow more money, and they did. Their house prices went up, they felt happy. For the Czech Republic today, you borrow at a lower cost than Greece, you borrow at a lower real cost than Spain or Italy, you're in a much stronger position as an independent currency project.
You also say that emerging markets are going to outperform the more developed markets in the Western Europe or even the United States, etc. So why is that?
The same story that what we saw in the 1970s was a disaster in Western countries. So no one wanted to lend very much to countries that needed to go to the IMF. So where did people put their money? And it went into emerging markets. It went into Brazil, into Mexico. It went even to Eastern Europe. Ceausescu built his the Sidex steel mill in Romania. The Katowice-Warsaw highway was built with Western banks' money in the 1970s. And I think we are going to see the same thing again now.
Let's say I have 70% of my stock holdings invested in the US market now. Am I doing the right thing?
Well, I would say not, but...
Well, okay, these are multinationals. I mean, these are companies with assets as well as activities all over the world. So it shouldn't matter, right?
You're getting exposure. In the Dow Jones, anyway, you're getting an awful lot of exposure now to export markets and to the global economy. But I think the greatest potential, and we saw this in the 70s as well, was in some of the emerging markets.
Inflation, deflation is a long story. I don't even want to get to it because we don't have that much time.
Sure. But
price of gold.
I'm with George Soros that it will be a bubble.
Well, it will be, so it's not yet.
What we saw in the 1970s was the price reach a record level. In 1980, it was I think around $800 or $900, but in today's money, about $2,500, maybe $2,200. Today, we're still at $1,200, $1,300. I think there's lots of room for that to go up if inflation comes back in the States in 2 or 3 years, which I think is very plausible.
Your prediction for the economy of the Czech Republic through 2015, what is ahead of us?
You're quite a lucky country. You have a country with very low external debt, fantastic manufacturing base, you have low inflation, you have a country that saves money. The reason your banks didn't suffer more in the crisis was because Czech people like to save money. That is going to stand the Czech Republic in good stead. For the next few years, the Czech Republic has a good future.
Charles, thank you.
Thank you.